It's Monday, 24th of November, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday. We are kicking off the week with what feels like a real wave of global optimism, and you can see it feeding right into Indian equity markets.
Absolutely. The consensus is for a positive start, and it's tracking international cues almost perfectly.
Specifically, it's the renewed hope that the U.S. Federal Reserve might finally be ready to start cutting rates. That sentiment is basically oxygen for risk appetite right now.
It is, but this optimism comes right after a bit of a frustrating session on Friday.
Right, when the index tried and failed yet again to break through those recent record highs, it feels like a psychological ceiling, doesn't it?
It does, and analysts are being very clear on this. For this momentum to actually stick, the index has to decisively break and hold above that 26,250 to 26,300 range.
And if it does?
Then you could be looking at an upside target around 27,200. But for now, it's a high-stakes tug-of-war right at the peak.
Okay, so while the index is fighting that resistance, the underlying banking sector is, well, it's signaling some caution.
It absolutely is. The big story here is something we're calling Quarter the 13th.
Quarter the 13th sounds ominous.
Well, it marks a significant turning point. Indian banks have just posted their first year-on-year decline in operating profit in 13 quarters.
13 quarters. That's over 3 years of uninterrupted growth. That's a stellar run.
It is. And it's been suddenly halted.
So what finally broke the streak? What caused that, what was it, a 1% year-on-year drop in operating profit?
It all comes down to the classic margin squeeze.
Okay.
It's being driven by really muted growth in their net interest income, or NII.
And what's the dynamic there?
It's a fascinating speed mismatch. Loan repricing, banks adjusting the rates they charge borrowers, is happening much faster on the downside than the repricing of their deposits.
Wait, hold on. Why are deposit rates lagging? I would have thought that's the most competitive part of their business.
It is, but deposits are stickier. Banks had to get really aggressive over the past year raising those rates to bring in liquidity.
Right, for fixed deposits especially.
Exactly. So now their cost of funds is still high because of those rates, but on the lending side, competition is forcing them to cut rates sooner to keep their market share.
So that lag is what's squeezing the profit margin.
That's the 1% dip right there. It's
Yeah.
a structural challenge they're going to have to navigate.
That puts some real pressure on profitability going forward. Okay, let's switch gears to some specific corporate moves. We've got a major stake sale on the cards. Total Energies looking to offload up to 6% of its stake in Adani Green Energy. Now, a sale that big usually raises some questions about commitment.
It does. But in this case, it's probably more about portfolio optimization. Total Energies has always viewed their AGL stake as a financial investment, not just an operational one.
So this is about cashing in some chips.
Pretty much. Selling a piece of a high-performing asset to realize returns and maybe free up capital for other green energy projects globally, it's rebalancing, not a loss of faith.
Got it. And speaking of rebalancing, the BSE Sensex itself is getting a shuffle.
Right. Interglow Aviation, that's Indigo, is joining the benchmark index from December 22nd.
Which means someone has to leave.
And that's Tata Motors passenger vehicles. They'll be exiting. These changes always trigger significant fund flows from passive trackers.
Now let's talk tech. TCS just got hit with an adverse ruling from a U.S. court.
Yes, upholding nearly $194 million in damages in that DXC software case. That is not a small number.
It's a huge financial liability. It would make most companies sweat. But the market reaction seems, I don't know, kind of muted. Why so calm?
That is the key analytical point. The confidence comes directly from the sheer financial resilience of a company like TCS.
You mean their cash flow?
Exactly. Yes, $194 million is a lot, but you have to put it in context of their annual cash generation. It's just enormous.
Sure. But wait, at the same time, they're pouring massive amounts of capital into the future, right? Into AI infrastructure, data centers, all that. Doesn't this ruling cut into that?
That's the exact question institutional investors were asking. But the analysis shows their internal cash flows are so robust, they can cover this liability and fund their aggressive AI expansion.
Without even denting shareholder payouts.
Without denting shareholder payouts, it just reinforces that the top tier of Indian IT is operating on a totally different financial scale. They can absorb these shocks.
Okay, let's pivot from corporate balance sheets to the very foundation of the Indian economy. There's a massive structural reform here. The 4 consolidated labor codes.
Implemented on November 21st, and this is a huge governance shift that unifies 29 different central laws.
But it's more than just simplification, isn't it?
Oh, much more. This is a modernization effort. And maybe the most transformative piece is how it reaches into the gig economy, which was, almost completely unregulated before.
So in practical terms, what does this mean for a food delivery platform or a ride-sharing giant?
Well, the new code on Social Security mandates that these aggregators have to contribute a percentage of their revenue directly to welfare funds for their workers,
What kind of percentage are we talking about?
between 1% and 2% of their turnover, and that's capped at 5% of the total payout to the workers.
1 to 2% of turnover. That's a significant new cost for those companies.
It's not a marginal adjustment. It institutionalizes Social Security for millions and fundamentally changes the cost structure for those platforms.
And it's not just gig workers. The changes benefit formal employees too, right?
Absolutely. A critical one is for fixed-term employees, or FTEs. Under the old rules, you needed 5 years of service to get gratuity.
I remember that, yeah.
It's now been slashed to just 1 year.
Wow, from 5 years to 1, that's a dramatic change.
It is, and it makes fixed-term contracts way more attractive and encourages formal hiring.
The reforms also tackle inclusivity, specifically for women in the workplace.
Correct. They explicitly permit women to work night shifts across all establishments, even in places that were traditionally restricted, like hazardous sites, as long as there's consent and critically mandated safety protocols are in place.
That's not just a social move, it's an economic one. It gives sectors like apparel manufacturing so much more flexibility.
Exactly. It boosts their global competitiveness.
All right, from labor reform, let's look at some key macro policy signals. In agriculture, the government looks set to raise the minimum selling price of sugar.
And by nearly 23% after a 7-year pause.
7 years is a long time. That 23% jump is pretty significant.
It is. It's a direct move to stabilize the industry, ensure better returns for farmers, and help the mills manage their costs. It's all about domestic supply stability.
And that domestic story looks strong in the auto sector, too. Passenger vehicle volumes are projected to grow by around 5% this fiscal year.
Yes, but the real optimism is actually in the second half of the year. Projections there are for double-digit growth.
Which suggests what? That underlying consumer demand is still exceptionally strong.
That's the takeaway. The aspirational urban consumer is still spending.
And we're seeing that buoyancy mirrored in the housing market as well. India's top-listed real estate firms reported really strong sales bookings in the first half of this fiscal year.
It tells you that even with interest rate pressures, the high-end investment cycle is still very much engaged.
Let's shift our gaze now to the global stage. We can start with currency and trade. The rupee's trajectory seems to be tied almost completely to this anticipated U.S. trade deal.
It really is. The market sees it as a binary trigger. If a positive deal happens soon, you expect the rupee to appreciate.
But delays mean downside risk.
For sure. But what's really fascinating is India's stance in these negotiations. The strategy is being described as ready to wait.
Which suggests confidence. Where does that confidence come from? What gives them the luxury of waiting?
It all comes down to macroeconomic resilience. The U.S. hit key Indian goods like garments with a 50% tariff. That should have crippled shipments.
But it didn't.
It didn't. In October, the drop in shipments to the U.S. was only about 8.6% year-on-year. That resilience gives negotiators the room to push for better terms.
So they can absorb the shock while holding out for a better deal.
Exactly. They're aiming to cut import duties on over 80% of goods while still protecting sensitive domestic sectors like agriculture.
That strategic patience connects directly to another global battle, this one over critical minerals.
This is the resource race of the 21st century, no question. China has launched a major global mining initiative as a direct counter to U.S. efforts to build alternative supply chains for rare earths.
They're trying to consolidate their dominance. So how is India positioning itself in this race?
India has formally stepped up by launching its own critical minerals initiative. This means formalizing key partnerships, especially with Australia and Canada.
So it's about securing supply.
It's two-pronged. First, yes, securing the raw materials like lithium and cobalt. But second, it's about collaborating on green energy innovation to build resilient supply chains that are not dependent on China.
Okay, this is where things get really intense. A new report from the U.S.-China Economic and Security Review Commission, the USCC, just dropped.
And it outlines a genuinely terrifying new paradigm in conflict. hybrid warfare being used as a market tool.
What did they find?
They found that China used that brief, localized India-Pakistan clash back in May as a live combat testbed for its advanced weapon systems.
A live combat testbed? You mean they were testing things like their HQ-9 air defense systems in a real-world fight?
And their J-10C jets. They weren't just observing, they were stress testing their gear while two other countries were fighting. It's a shocking level of strategic opportunism.
It is, but you said hybrid warfare, so that was just one part of it.
That was only half the strategy. This is where it gets more complex. That kinetic testing was seamlessly integrated with non-kinetic warfare.
Meaning what, cyber attacks?
Sophisticated AI-generated disinformation campaigns. They immediately circulated fake images of debris from Indian aircraft, specifically targeting the French-made Rafale jets all across global social media.
So they were collecting high-quality military data on one hand, and on the other, running a sophisticated psyop to discredit a competitor's defense product. What was the endgame there?
The report says the strategy was stunningly successful at manipulating the global arms market.
How so?
The combination of the military data and the disinformation campaign was powerful enough to convince Indonesia to halt a planned, high-profile purchase of those same Rafale jets.
Wow. So it proves their strategy isn't just about military advantage, it's about gaining market influence and undermining Western defense sales.
And promoting their own platforms, like the J-35 fighter. It's a wake-up call for defense planners. You now have to factor market impact right alongside kinetic capabilities.
That is a powerful example of how interwoven everything has become. On a slightly less alarming note, let's briefly touch on diplomacy. The G20 summit in South Africa went ahead despite the U.S. being absent.
Which signals that global cooperation, especially among the global South, can and will continue to function.
Right. And regarding Ukraine, U.S. and Ukrainian officials reported making meaningful progress on a peace framework.
Yes, one designed to uphold Ukraine's sovereignty. But that plan has been met with a lot of skepticism inside Ukraine itself.
And finally, on global governance, PM Modi used the IBSA grouping to advocate forcefully for reform of institutions like the UN Security Council.
He called it an imperative, not a choice, but a strategic necessity for the 21st century.
Okay, to end our deep dive, let's step away from Earth entirely. Time for our science and innovation deep dive. This one, well, it fundamentally rewrites our neighborhood speed limit in the universe.
This is a spectacular finding. Cosmologists usually rely on standard models to estimate how fast our solar system is moving.
Based on local gravitational pulls, right?
Exactly. But new research using incredibly precise data from distant radio galaxies has found something startling. The solar system is racing through space at a velocity over 3 times faster than what those models predicted.
3 times faster. That is not a small margin of error. What fundamental assumption did that just shatter?
It challenges the very structure we thought governed our local cluster. The old models assumed our speed was mostly dictated by the gravity right here in the Milky Way's neighborhood.
And now?
Now, scientists have to rethink the influence of much more distant, powerful gravitational sources. It could be related to how dark matter is distributed or the pull from some unimaginably large cosmic structures far away.
So it completely changes how we model our place in the cosmic flow.
It does.
We thought we were driving the speed limit on a quiet back road, but it turns out we're redlining it on an interstellar freeway. That really gives you something huge to ponder as you start your week. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.